Hi, it's Lee, and welcome to the Tesla Economist. Elon said that Tesla will be worth more than Aramco and Apple combined. At the time he said that, their combined market valuation was $4.4 trillion. This statement is somewhat ambiguous. It could be inferred that one day Tesla will be worth more than them combined, literally, or their value at the time of the statement. However, he goes on to reinforce this statement by reminding us that he also said Tesla will be worth more than Apple in the past, of which it was worth $700 billion at the time of that statement. And Tesla did achieve that and more. So let's work with Tesla being worth $4.4 trillion. When do we think this might occur, according to Elon? I think he's given us enough information that we can use to calculate about when this might occur, aside from this one element, the PE ratio. So let's estimate what that might be. I would like to place this scenario with a trailing 12-month PE ratio of 50. With that, we can then calculate how much profit is required to achieve this valuation, then work out how many vehicles this might require to be delivered, and then estimate when we think Tesla will be at this run rate. Now, a PE ratio of 50 may perhaps sound optimistic for when Tesla is at this valuation, but here's the thing. This was a trailing 12-month PE ratio, and like I said, we're going to base this scenario on what Elon has told us. So this would also be based on a rate of 50% growth year over year. A PE ratio of 50 would be the average for the last 12 months. And if there is 50% growth from the start of that time, then it would mean that the current quarter of when we're at this valuation would be closer to a PE ratio of 40, just relative to that quarter, which likely seems more reasonable. However, Tesla is expecting 50% growth in vehicles, which would likely mean more than 50% growth in actual earnings. In other words, I think we're looking at closer to a PE ratio of 35 relative to the quarter in which Tesla hits this valuation. Also, remember, we don't likely expect this valuation to occur next year, or by the time this milestone is achieved, we're hopefully out of a recession, and thus not facing so much PE compression. So we'll be working with a quarter with a PE of 35 times earnings. That would mean Tesla are at a profit equivalent of $125 billion annually. But we're actually just looking for a cross-section of a particular quarter that it would actually be $31 billion profit for the quarter. All right, there we go. Easy. Now we have a good idea of what earnings Tesla need to hit if they are able to reach this valuation. The next task is to work out what it's going to take for Tesla to reach this level of earnings. Well, like I said, we're going to assume in this scenario that things are going somewhat as planned and using 50% annual growth. This Q4 shouldn't be too far off $6 billion in earnings, so we need 5 times as much profit to reach this objective. While at 50% growth, it would take 5 years to hit 5 times as much profit. So do we assume it would be around 5 years then? No, because like I said before, we have been told 50% growth in vehicle production, not profit. As Tesla expands and ramps up, the total cost per vehicle keeps dropping, most noticeably in OPEX, one of Tesla's massive advantages over all the competition, their huge operating leverage. Not only that, the vehicle ramping that we're expecting the most to generate this improvement in deliveries is going to be coming mainly from the new factories, which is fairly obvious, as the other factories are more or less close to capacity. However, Tesla may need more factories than they have now to reach this level. But how about we first see what sort of profits we can generate from all the existing factories when they're close to their capacities. For capacity, we're going to have 600,000 Model Ys from Texas and 500,000 Cybertrucks. Then, for Berlin, we have 600,000 Model Ys. Why are these numbers? Well, we are expecting 100 gigawatt hours a year capacity from Texas with the existing 4680 lines, and 50 gigawatt hours a year from Berlin with the new 4680 factory there. This would align close to these capacities, along with these also being roughly the expected capacities that we have been officially told by Tesla. So ramping of these new factories with Tesla's new batteries is going to mean that Tesla are selling, as people like to call it, the high-end luxury SUV version, the long-range Model Y. This means costs will be lower and average selling prices will be higher. So let's just start a rough estimate of how much profit these factories will produce at capacity. We'll also adjust the ASP slightly to correct for what is most likely a weaker US dollar than we have today, as the rates would have likely reduced by this stage. I'm sure most of you would expect that this valuation won't occur during the recession anyway. Equally, these prices are going to be in real terms and not adjusted for inflation. We'll also ramp up Fremont and Shanghai a little bit too. Alright, when they're all calculated, we see an increase of ASPs to $70,000, which does seem a bit high, but we've ramped up the S&X more, and the Cybertruck has a higher price tag. Also, China is now a much lower proportion of sales, and also this doesn't include any more price increases from the US due to tax credits either. We're now also seeing gross auto margin hit 40% due to vehicles that cost less to build due to advances in manufacturing, making vehicles with higher prices. Remember, Elon said 4680 cells will cost $70 per kilowatt hour, a very underrated statement. The math says what it says, no matter if you don't believe it. And I'm not even including the $45 subsidy per kilowatt hour on batteries made in the US. Tesla's ASPs may be higher in the US. There could very well be an additional $5,000 more on each vehicle to compensate for the insane demand they're about to face if this tax credit goes through. Also, I'm not including semi-trucks in this model. It would have some impact, but not major. This comes to 800,000 deliveries for the quarter, so once the existing factories are ramped, then we should see an annual run rate now of 3.2 million vehicles. Wow, sounds like a lot, doesn't it? Well, just remember, at the end of this year, we're going to be at an annual run rate of 2 million vehicles. And we expect 50% growth, or more. So this rate could literally be in around a year's time. Although, if we want to be exact, Tesla need 465,000 produced in this Q4 to hit 50%. So Q4 in 2023 would only be 700,000, or an annual run rate of 2.8 million. That doesn't sound too unachievable to me, given the resources they have. I think it's possible Tesla should exceed 50% growth in 2023. I mean, easily. If we are at a run rate now of 2 million, or at the end of this year, and 50% growth target is only 2.1 million, it's not going to take a miracle. Anyway, these factories ramped takes us to $23 billion in gross profit. So we're $8 billion short of our target. And we haven't even added OPEX or tax, nor the other sides of the business either though. Either way, we're going to need more vehicles produced to reach our target. Now, I'm sure you're like me and see that Giga Shanghai Model Y is at an annual run rate of 800,000 units. And we're talking about the new state-of-the-art facilities producing just 600,000 Model Ys. And you'd be forgiven for thinking that it is possible that maybe the new factories could exceed Shanghai, given they are using front and rear castings and structural battery packs. Yes, this also occurred to me. But don't worry, you don't need to comment about Chinese work ethic and how much harder they work and longer hours, because I'll address that. These are automated production lines. They move as fast as the robots can make the vehicles. The humans are not the bottlenecks. Yes, the Chinese workers do work longer hours, but Tesla can get around that by hiring more people for more shifts. These new factories are more efficient, and I expect to see more output per squared feet, and I don't think I'm going too far out on a limb. In fact, I would go as far to say that they could hit 1 million Model Ys a year, at least once the cell production increases to max production, although it could take a couple of years to ramp that high. Either way though, I would say if we are to hit this level of production, we may need an extra factory or two. We might hope that Tesla announce their next factory soon and they start construction early next year. But in reality, probably wouldn't expect volume production from this factory until mid to late 2024. And that's only an additional 250,000 vehicles a year by that stage. Now, Tesla are working on their new model, which will supposedly be in volume production by 2024, and this would have to come from a new factory too. This would lower the average selling price. So for any new factory, we might expect a lower ASP. I'm going to place $40,000. So I've added two new sections, one for an additional ramping for all new factories to a further 1 million a year, and we'll make these an ASP of $60,000. This will include some extensions to the current factories and some additional fabs, but no additional factories. Then another section which does include additional factories, which includes new locations and possibly the likes of, say, a new Model 3 factory in Texas or Berlin, for example, or the new Shanghai factory that we're expecting. I'll give these just a 40% margin as they have lower ASPs, so possibly not as profitable as the long-range Model Y nor the Cybertruck, but I think these should be about the numbers required to hit our goal. This is $33 billion of auto gross profit now, and we were after $31 billion net. Now, when I plug all these numbers in and include the other areas of the business, which would have also grown by this stage, then we magically have hit $31 billion in earnings. So the question is, how long will it take Tesla to hit this level of production? This is 1.3 million vehicles for the quarter, or 5.2 million annually. That's starting to look like a big number. Well, if we're going for 50% annual growth, starting with 1.4 million from 2022, then in 2025, we'd expect total production of 4.7 million. So Q4 of 2025 would likely have hit this milestone. Or we could look at it ramping these current factories, possibly 2 more years to get them to this rate of production. Then if we started to build 2 new factories next year, then they probably would be able to hit a run rate of around 1 million collectively by the end of 2025. Perhaps with small contributions of a 3rd or even 4th factory that may have started construction in 2024. Therefore, my guess would be that Tesla might hit this valuation at around the end of 2025, or perhaps early 2026. So 3 to 3.5 years away, assuming this PE ratio is correct. Remember, like I said, we would hope to be out of any sort of recession by this date, so the PE won't be as compressed. Also, Tesla would have demonstrated more growth by this stage, and the market would feel more confidence in future growth with a good track record. And also remember, this is based on what Elon said, and all going well. However, look, at this stage, even if it's only hit about half that, then we're still up 3 times from where we are today, which is an outstanding return. Half that should be a very easy task. Also, this does exclude our lottery tickets, FSD and robotaxis, which could make that PE ratio significantly higher. But in order to hit this, I think we do need to start construction of that new building early next year. This spreadsheet is also available for download in Patreon. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.